good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the markets have taken a bit of a U-turn. We were talking about those all-time high levels when we started off the trading session. But since then, it's been one way down for the markets, sitting at the lowest point of the trading session, threatening to go below the mark of 18,700. So definitely those record highs eluding the market at this point of time. It's clearly a day of underperformers because it's Pharma, IT as well as the PSU banking space which is bucking the trend today. All of these three sectors which have been the key laggards over the last couple of weeks are bouncing back today. And it's private banks that continue the underperformance. Heavyweights like ICICI Bank, Axis Bank, Kotak Mahindra Bank, these are the biggest drag at the index level, and that's the reason you have the Nifty also coming under pressure, and Bank Nifty is one of the key underperformers today. Having said that, broader market outperformance continues. It's not by a whole lot because the mid-cap index is just around the flat line. Small-cap index has managed to eke out small gains, but nonetheless, some sort of outperformance coming in from broader markets. And India Wix is something that we are tracking, given the fact that it spiked as much as 5% in the intraday session today as well.
JSPL, that's one stock. Kotak Institutional has upgraded it to a buy, raised the target price to 740, saying it's their top pick within the sector and they have a strong balance sheet which makes case for the re-rating. That stock, of course, has been a bust today, 5.25% higher as we speak right now on that stock. There's 5-star as well, which is in focus. Nomura has initiated a buy with the target of 750, saying that they're among the fastest growing in the NBFC niche market and that they have an untapped opportunity. The competition is going to drive a 30% AUM for them. So that's another stock which is in focus. Shriram Finance, we spoke with the management as well, post that 2.6% block deal wherein the PE fund TPG has exited the entire stake in the company. So that's another stock which is in focus this morning. But in terms of trends, like Anisha was mentioning, there's the two newsmakers, that's Jindal Steel as well as Shriram. But then there's Lalpat Labs, M&M Finance, ABFRL, which is seeing some renewed buying. And HDFC Life, after that big move on Friday, today is seeing some follow through after a negative start. Having said that, for the index, we've definitely taken a big step back, considering that we were just a few odd points shy from that all-time high. We're now struggling to even hold on to 18,800 on the futures. And for the Nifty spot, we're at that 18,700 mark. So almost a 1% kind of fall from the top of the day is what you've seen. Under pressure, Idea, DLF, Ambuja Cement, Taracom, Adani Enterprises, which is now down about almost 4.5% in focus. But, you know, since I just highlighted Shriram Finance and mentioned that we earlier did speak with the executive VC of the company as well, let's hear what they had to say about TPG offloading stake in the company.
To my best of my understanding, I think it is a total sale. Nothing is left in Shriram Finance Limited. But TPG has been our partner for more than 15 years. And they continue to be our partner in insurance venture. So they have been our strategic partner, well-wisher, and we continue to work together. The TPG has been with us for quite a long time, and they have every scheme or every fund has a limitation. And I think this particular fund, they have been, I think, with us for more than 7 or 8 years. And they have to sometime retire the fund. So, and that's the reason. So, however, we are quite happy with the TPG, and definitely we expect them to partner with us in our future ventures.
Okay, so that's a word coming in from the management of Shriram Finance, but we have a guest ready on the show. Let's go across to Andrew Holland. He's talking to us about the fundamentals of the market, and Naresh Marani, as always, is joining us on the technicals. Before I come to you, Naresh, let me start with Andrew today and ask him about the NBFC space, because this morning there are a couple of positive brokerages we are seeing today as well. Names like Bajaj Finance are managing to buck the trend. Andrew, what's your take on the entire NBFC space, and which would be the stocks that you like here?
Yeah, I mean, in terms of the whole kind of banking finance, including NBFCs, you know, it's a sector that we like. You know, I know that the banks have underperformed more recently, or the bank index has underperformed more recently, but that's after a very strong run. So I expect that to resume very quickly. I still like the banking space, and you know, I know that you know, we're all in that dilemma of you know, what's Fed going to do globally, whatever central banks are going to do. But here in Asia, and I think for India, I think the opportunity still is that rates could come down quicker than they would in the developed markets. So if the RBI, comes with a rate cut or the expectation of a rate cut later this year, I think the banks will rally well ahead of that, and that's probably what we've been seeing anyway. So no harm that we've got some kind of holding pattern for the banking sector at the moment before the next up leg appears. And I think that will be. I actually think the catalyst for this will be once the kind of merged HDSE twins, start kind of trading as one, and the market gets to grips with what the real potential is there, which I think it's probably just disregarding at the moment as two separate entities. And I think that's going to be the key for the banking index. So that will drag up all stocks. But I mean, I think I'm not as bullish on NBFCs. I still like the private banks for the time being. But of course, you always get this kind of rotation within the sector. So whether it's within the financial sector, whether it's life insurance or it's going to be NBFCs, I think we're going to see this continue until the banking sector the banks take the lead in pushing the sector higher again.
Well, stock which has done very well this entire season, I think, is Bajaj Finance. It was expensive, it is expensive, and based on future earnings also, I think it will remain expensive. I think growth is enviable there in terms of what the franchise value is. Andrew, is there merit in now, let's say, shifting out of corporate banks into NBFCs? Because banks do well when interest rates are rising. NBFCs do well when credit growth is rising and interest rates are flat with a downward bias.
It's a good thought, Nikunj, but it's not something I would do right now. I still think there's a potential for some. I think more globally in terms of nervousness about when the rate hikes the rate reductions will happen, whether it's later this year or early next year now. So I think that will keep us guessing a little bit. But I would still want to be the banks rather than NBFCs at the moment. I get what you're saying in terms of interest rates, but I think the banks will be the one who take the lead here first.
Okay, let me quickly bring on board Naresh as well and find out what really happened in the markets. Naresh, quite the disappointment considering we were gearing up for an all-time high today, but we're down a good 1% from the top.
So the pressure in the heavyweights continues from higher levels. We are seeing a Reliance Industries, which was trying to make a breakout move, pulled back by 1%. HDFC Bank continues to be sluggish. ICICI Bank takes a little bit of a knock. So overall, jitteriness continues on the index, but if you look at the small cap index, even now it is in the positive territory. The mid cap index is in the positive territory. So the breadth remains very positive. The index heavyweights are yet to take that momentum move. So waiting for at least one of the 5-6 heavyweights to actually break out, and that would trigger a breakout move on the upside. For now, the view remains the same. You want to be buying closer to 18,600. or in momentum above 18,900. For now, hold on to the positions, add on dips or on a breakout move.
Andrew, what are you buying in this entire, the new, pot of gold, which is the urban consumption space? From Sula to a Landmark to an Ethos, things which you consume, Andrew? Wine, watches, good travel, everything is going up.
Yeah, Nick, you're always going to get me on these points, but travel definitely is something that we talked about before in hotels and the domestic travel, and I think that I was at a conference a few weeks back with Indian hotels, and the prospects there just look very, very, very strong. At least for the next one year that I can see. So I think the momentum for the hotel sector is clearly going to be higher. Obviously, with the problems in the with some of the airlines, it's going to favour the leaders there in terms of Indigo and Air India of taking more market share. So those are the easy ones to talk on. And one of the themes I've been talking about, not just alcoholic beverages, but beverages as a whole, which includes non-alcohol. I do feel there's a move towards premiumization there, and I think it's only just started, and I think it has a long way to go. So I think we're at the cusp of a big change in terms of people's moving up in terms of what they consume to drink. that's going to be great for the whole for the whole industry in terms of margins. So it's a long-term play, but I think the moves in these stocks have only just begun.
What is making a comeback, or what has made a comeback today? Dr. Path Labs, Metropolis, Thyrocare, and this is the YTD data for emerging markets in terms of flows. And if one really looks at the kind of flows what we've seen in this year, I think the number has turned positive now. But in terms of a appeal, I think India has not got the best inflows despite the India appeal. Korea has got higher flows than India. Taiwan has got higher flows from India. But the minute you add last year's big sell number, in let's say 2 years of data, the emerging market outflows I think are still very bad. And in India, I think the emerging market flows can really pick up considering the kind of intense selling we saw in last 2 months. We saw in last 2 years. Andrew, if I add back what FIs have sold in 2022, while they may have made a comeback in 2023, but net, I mean, they still are nowhere close to what their COVID or pre-COVID positioning was.
No, Nikunj, it's a very simple story, to be honest. It's all about relative valuations, right? So, whilst, our index did well last year, to manage not to fall as much as anywhere else, when the market's looking ahead, and let's just say we have this recession that we've all talked about, again, the market would look through that and say, okay, when that happens, and you're going to look at growth again, because interest rates will start falling significantly, who are the beneficiaries within Asia? Let's just take Asia for this example. And it's obviously going to be, the Koreas and Taiwans, which are going to be the big exporters outside of China. And that's where you've seen the flows go to. So that both those markets, let's say Taiwan is up, 24% year to date, and Korea must be up 17%. And that's been helped by, obviously, the reopening of China as well. So the first move is going to be to the exporters, to get the rebound in global growth as and when it happens. And then it's going to be India. And ours is going to be a second half story, whereas our earnings start to kind of improve in the second half of the year, partly because of lower, input prices from raw materials and metals and oil. And also the fact that the government spending and the private capex spending will start to feed through to earnings. So ours is more of a second half. Yes, we're getting some of that now. And we're probably getting some of that now because the market's saying that India is one of the few countries in the world where you can see interest rates come down a lot quicker than in the developed markets. And I think that's going to be the story for Asia.
On board Rudramurthy to talk about what he's reading on the charts right now. Rudra, just wanted to get your sense on what's looking like the weakest link and keeping the Nifty on hold from hitting that all-time peak.
Definitely it is to do with banks. If you observe banks having hit the all-time highs much faster than Nifty, it is taking clear resistance at those levels of around 44,500 on future, and repeatedly having taken that resistance at 44,500. Now it is breaking even crucial support which was there at 43,950, and I'm referring to Bank Nifty future level. So having broken 43,950 on Thursday, market made a pullback on Friday. But if you see today, again Bank Nifty future is clearly trading below those levels of 43,950, and that is not good. So if we make any close below 43,500, I won't rule out a 1,500 point kind of a fall in Bank Nifty, and that can lead to fall even in Nifty. No doubt Reliance held Nifty for such a long time and it was outperforming. Even now for me, Bank Nifty is a better shot than Nifty, and lot of stocks, even if you see like Axis, if you see even ICICI Bank and even Indus India Bank, these are all some of the banks which have just turned from their top. And I won't be surprised if I see further fall to come in these stocks. So I will be very cautious on banks, and you have to be very, very stock specific if you have to be on the long side, or else general market for me, clear exhaustion is seen in banks.
Coming in as far as the weakness is Bank Nifty is concerned. In fact, on that note, we'll slip into a very short break. But as we do that, listen into the big market voices. Manish Chokhani, Samir Arora, as well as Atul Suri, all of them joined us on our birthday celebrations. Listen into what they tell about the market outlook.
couple of years is really the period of infrastructure, capital goods, and defense, railways. All these companies are really going to benefit a lot. And I don't yet think the prices have captured that fully. As you continue, again, our old, the financials are at the center of everything. So while the last few years they've all gone after the retail guys, I think this whole corporate banking, the PSU banking pack, if you take the top 3 or 4 banks after SBI, they're all in 30,000 crore type PPOPs, looking evident, which are large numbers. SBI will be north of maybe 1,25,000 crores. I don't know. I think you just interviewed the chairman. The numbers are going to be staggering coming here. HDFC itself will be probably close to a 1 lakh crore PPOP.
So for that, my simple thumb rule is compound at about 13-14% and see whether 1.14 to the power of 5 into 66,000, does it become 1 lakh or no? So plus minus it would be there. But right now, yes, right now, next at least 30-60 days, because I can't commit here forever. Depends on how the prices move, but right now I would think that they are there for some time.
I saw the Sensex at around 1,000. So that's like what you're talking about is a 50, 55, 60% move. So I'd see that there's no reason why we should get there in about 4 to 5 years. For us, are actually shockingly, controversially underweight the large banks, and we are overweight the NBFCs. And I think that in that space, well, it's all doing great, yeah.
Thanks for staying with us. We've missed that all-time high today. Can we take a leap again in the second half? Unlikely today, but we were 50-60 points, 9 points actually away in the morning, and then you just moved up. These things happen. I mean, it's like 10 points here and there. Just really does not matter. The fact is that we are there in terms of in positioning. The difference between the previous all-time high and now, I think, is A, valuations, B, the trend of interest rates, C, the trend of inflation, and 4, and the most important thing I think is participation. There were a lot of naysayers now. Open interest in the F&O market, total FI ownership in the F&O market, retail ownership in the F&O market. All of them are clearly indicating that there is very little level of participation, and I think which is evidently getting captured in the way how this market has managed to climb the wall of worry. Andrew, at what point in time you would be tempted to book profits? You would say, look, I'm not going to be a passive participant in the market now. I think this market is running ahead of itself.
So yeah, in the past, Nikunj, when we talked about this, I've been more of the kind of over the past say year and a half or so. I've been when markets have been going higher, I've been saying it's probably the time to to book some out because the market was really doing nothing overall, and that proved to be the case to some extent. Given where we are today, the market's up 3% for the year, but we've become more constructive over that. So I'd actually be a buyer on any kind of dips rather than I wasn't before. So it's really global factors which I think are going to spook our market if nothing else, because all the factors which you've just mentioned, interest rates are going to come down, FIIs are getting more interested in India. And obviously retail flows remain very robust. So all of those factors make me feel that the market's going to go higher over the next 6 months or so. But that said, I think you're going to still make more money on the themes that we talked about in the past than you probably will in the index in the very short term. So it doesn't mean you can't go to all-time highs, but that wouldn't necessarily mean that you've made the market's going to be at 5%, right, for year to date, if that was the case. So it's not compelling to kind of get too excited, but I think, I would be looking at the themes underneath to make you real money, and some of them we spoke about already in terms of banking and in terms of, beverages.
Right. Besides these pockets, Andrew, where are you comfortable at these market valuations to put fresh money to work?
So again, it goes back to the same kind of sectors which we talked about, which would be defense and renewables, which is a global kind of capex spending, and India is obviously going to do a lot of defense spending going forward. I get the problem is that it's very kind of lumpy in terms of the contracts. So you don't know when they're going to be awarded. So that's the difficulty on the defense side. I think the electronics industry is going to be huge. We talked about this before, but I think, not just from a domestic viewpoint, from an exporting potential as well. So there's not many ways to play this at the moment, but I suspect that this industry as a whole will mushroom, and you'll see a lot more players come into this area. So it's something I would keep a watch on in terms of trying to identify new and upcoming companies as well. And then finally is obviously the private capex and the ability for India to kind of capture some of this foreign direct investment from overseas against from away from say China, whether it's through PLI or whatever it might be. But I think that lends itself to the kind of ABBs and Siemens of this world in terms of their ability to kind of play into that kind of whether it's a smart factory, smart office. I think it's a different type of capex than the usual L&Ts, BHELs, roads, bridges, and so forth. So I think there's a new capex cycle happening, which is probably more lucrative for the ABBs and Siemens than other companies involved.
Interglobe Aviation, why am I bringing it up? We had Vijay Kedia, I think on the budget day, he said he's buying into Interglobe Aviation. Reaffirmed, I think, on anniversary day, which is Friday, that he still owns on to Interglobe Aviation. Interglobe Aviation has hit a record high, and this stock has done exceptionally well in terms of where the positioning of the stock is. Let's hear out Vijay Kedia's view on Interglobe Aviation.
I like airline stock, and I have invested in that. I've invested in Indigo. That is again a disclosure and disclaimer. Of course, I'm not a consultant, so I don't recommend shares. This is what I have done just for the benefit of your viewers. So I've invested in Indigo, being the largest company and the most profitable company in airline sector. And I am bullish in airlines. I think what had never happened in maybe 20, 30 or 50 years in airlines industry should happen in next 5 years. This is, as on today, when I'm talking to you, I have this opinion. Airlines is a sunrise industry. In spite of all those bad things and about bad cash flow and whatever negative, opinion of others.
Okay, let's discuss some of these pockets actually, and let me get back to Naresh. Naresh, Interglobe Aviation, and then of course their entire defense pack, which we talk about often, but considering the conviction that's happening there, or for that matter in some of these railway names as well, identify your top two bets.
So in aviation, it's very clear it's Indigo, and one only has a concern of the promoter block, which created a dip last time also. Otherwise, the trend has been good for the whole sector across the world. So Indigo saw a dip because of that. In defense, given that a lot of these names have moved up quite a bit, there are two names which are still yet to catch up in terms of relative outperformance. One is Bharat Electronics, which has moved up quite a bit in the last 1 month, but still has been a relative underperformer to the rest of the names. And second is Bharat Dynamics, which has given a breakout in the last couple of sessions. So these two names look interesting. BL in the previous cycles has been one of the best performing names in all the cycles of defense before, or say capital goods related stocks. So I would go with dips with BL and BDL.
Talking about some of the breakout counters, let me flag out some of the price volume buzzes as well. M&M Financial is something which has hit a 3-year high on an intraday basis. The volume is 3x the 20-day averages, and it's been advancing for third consecutive month. So M&M Financial definitely on our radar. We also have Restaurant Brands Asia, which is in focus. It's shown a breakout from 15-session consolidation, surpassed the 200-day moving average, and the volume is 3.5x of 10-day average. Incidentally, Restaurant Brands was one of the birthday ideas given by Purinju as well, and he was quite positive that this could be one of those multi-bagger ideas. So you have Restaurant Brands Asia, which is higher by 5% today, and Hindustan Aeronautics has hit an all-time high on an intraday basis. It's been trading above all the key moving averages, and it is in focus on account of Prime Minister's impending visit to the US. So we are watching out for that as well. In fact, since we're talking about Restaurant Brands, let's pull up the verdict coming in from Purinju, because he flagged this off as one of the multi-bagger ideas.
I think one stock which I would like to say, which is not in the limelight today, is RBA, the Restaurant Brands of Asia, the Burger King company. So this is a beautiful business. It's in the infancy in this country. Last few years, they have been struggling with many things. And now this company owns the business of Burger King and Popeye in Indonesia also, the same listed company in India. So I feel they are well set for growing much faster and, creating cash flows in the future. And this business is futuristic. And I think this is Burger King is the second largest brand globally in that segment. So India also is a huge, 17-18% of the people, the world population lives in India. And I think it's a great opportunity for conservative value investors at 107.8. There is no hurry to buy the stock. So we are holding it in our portfolio management, and the AF, we are still buying for the new clients. It looks like a sober, safe idea. And it's like a new gen business, and you can participate in that. I feel this is RBA is a stock to watch, but there is no hurry. Again, I'm telling you, nothing is going to change dramatically. Here, there is one technical issue. Everstone is the ultimate holding company, Everstone Capital. So I think the whole market, knowledgeable people about this company and its business model, they all are waiting for that event to happen. When will Everstone sell the stock?
Okay, Unico has done actually rather well for itself. I'm scanning through pharmaceuticals, and then every time when you think that pharma stocks are making a comeback, something goes wrong here, something goes wrong there, they never pick up. But in general, I think there's one category which has done well within the pharma space. I think it's their diagnostic space. Rudramurthy, do you like the diagnostic space? Do you think it has bottomed out finally?
Yeah, Nikunj, definitely if I see something like Narayan Hrudayalaya, for me, this stock has moved up too much from levels of around 820 to now above 1000. So any correction in this stock or any profit booking to levels closer to 930, I will be a buyer. And if I have to look at even stocks like specifically from pharma only directly, I will be interested on both Sun Pharma as well as Lupin. So both for me definitely looks very strong. So any dip on Sun Pharma at levels closer to 980, I will be a buyer. So buy even at current market price or any dips to 980. And for me, even Lupin looks very, very strong on chart. So you can directly play the pharma only on the long side, both available in future. So Lupin also at current market price or on any dips to levels closer to 800, I will be a buyer. And both these stocks looks very, very strong to me.
You may want to pay attention here. I'm coming right back to you. The valuations of diagnostic stocks, where they were trading. And at peak of the COVID, when infections were at the peak, testing was at the peak, the diagnostic stocks in India were commanding P multiples of 70 times, Thyrocare 50 times, Dr. Lal Pathlab 84 times. Now 84 times is something which even Nestle has not commanded. And these are businesses which everyone thought that the testing in India will only increase. The logic given was that COVID sugar rush will not have impact on business because the COVID prices were capped. But where markets missed out was that when you were getting yourself tested, there were again multiple blood tests, multiple diagnostic tests which some of these firms were running, and that is where there was no price cap. And now that, touch wood, COVID has gone, a lot of businesses normalized. And then you got competition which has only intensified because of online businesses and everybody within the hospitals also giving a same service. So I think this entire space is now like a 12 to 15% growth business and available at a P multiple of 25 times plus. And this space, in a sense, had a huge sugar rush. I mean, Mr. Velumani was a smart and intelligent guy. He sold Thyrocare ownership at 1300 and look at where the stock is. So Andrew, there was euphoria and now it's back to basics. But diagnostics as a sector will grow, whether it is necessity or whether it's wellness. Do you think it's a good time to buy the fear in diagnostics?
It's not a sector I've really kind of dug deeply into, Nikunj, but I think you're right. I mean, there's so much competition there at the moment that it's only going to intensify, and therefore pricing will go down. But for sure, as we've seen elsewhere in the world, there's going to be more and more people taking precautions, looking after the health, so getting more checkups than they did maybe before. But I'd probably want to play it through the hospitals rather than I play it through the diagnostics at this moment, because I think you still, anything that you want to do that you couldn't do before COVID or during COVID, you're probably going to tackle that right now, and that's why you see the hospital stocks do well, and I expect that to continue. That's not going to go away, but I think the competition in diagnosis is going to heat up because. I've got, just where I live, I think there's 4 or 5 I can go to just to get my blood test done. I haven't really checked the prices, but I'm sure if I did, it'd be quite competitive.
We'll let you go. Thank you so much for joining us. And let's quickly take the closing trade ideas from our chartists as well. Nuresh, you go first.
So looking at a buy on Tata Power, the stock has slowly tended up after that breakout about 210.15. Is now making a smaller range at 220 to 225, expecting it to break above the 225 mark in the short term and head up higher.
Power is one of the buy closing trades coming in from Nuresh. Rudra, what about you?
I am on the sell side, especially banks looks very weak to me, and I have 2 sell idea. One is sell on an HDFC AMC. So for me, last 4 days, this stock has cracked down with huge volumes. Open interest build-up is happening. On the negative side, price is coming down. So for me, HDFC AMC is a sell. Look at target of 1,770 in futures with a stop loss of 1,900. AU Bank is also a good sell for me. Good risk reward trade to sell current level. Keep a stop loss of 775 and a target of 751 on the downside.
Coming in on EU Small Finance Bank. On that note, sipping a very short break. Don't go anywhere.
Okay, let's move on since the market is unable to actually claw back to that all-time high. By the way, you may want to check in on the European markets as well, because while the US markets are shut tonight, the European markets have started off on a weak footing as well. Across the board, I can see 0.5% cuts coming in. But another major event ahead of Prime Minister Narendra Modi's state visit to the US, the focus is now on India-US bilateral trade. My colleague Sharad is here to explain how this bilateral trade between the two nations will receive a big boost from the PM's visit.
Well, yes, the important meet is coming up this week, and do remember that USA is India's largest trading partner. And of course, China comes in second with trading volumes of roughly $114 billion of trade. Now, the important thing is almost $28 billion of trade is actually in a surplus mode when it comes to US. And lastly, Prime Minister Modi would be actually meeting the top 20 CEOs of the companies in USA. Now, do remember that India-US trade ties, if you look at it, now let's do it segment-wise. For the defense, a joint production of G414 jet engines is expected to happen. And also, there are partnership expected, especially in the maritime operations. And this was very sure during the Quad meeting. Apart from this, also, advanced defense and tech cooperation would be in focus. Now, moving ahead, let's focus in the space segment. Over here, we look at it, there is a collaboration expected in the key areas, and these include planetary defense. Interestingly, there is commercial space activity and also human space flights. Now, apart from this, also looking at the communications part, as earlier it was stated in the meet, 4G and 5G tech stack would be in focus, and also the deployment of the entire 5G technology in India, that would be there, especially in the infra part as well as the technology segment. Now, do remember that there is the semiconductors part as well, where the Micron is expected to involve a large announcement of investment in the Indian markets. Now, do remember it's a semiconductor manufacturing company which is called Micron.
All right, Prime Minister Modi will be in United States for an official visit, and what from an India standpoint, what you may expect? You may expect large defense deal, big bilateral trades. It is evident that the dependence and the partnership between both United States and India, I think, is at its it's at an all-time high in terms of collaboration, negotiation, transfer of technology. US is India's largest trading partner, and you pretty much know that how China plus one policy in a sense is really having an impact there. Deepak Shinoy joins us now. Deepak, good to have you back. Thank you for joining us. The summer rally of 2023, while no one's complaining, my question is that how long the party will last?
I wish I knew. I wish I knew. I don't know if the party will continue to last forever. But I can tell you this: the markets generally hit all-time highs. It hit an all-time closing high only on Friday. When there's a lot of disbelief that has kind of been bought into, and to a certain extent, valuations have corrected from a 24 or 25 times earnings to what is about 21 times, 20 to 21 times earnings in the large caps, and even lesser in the mid and small caps. So this may not even be the party that we're thinking about, because parties start after the PE of 22 or 23. So perhaps what we are just stuck with is anchoring ourselves to a number that was valid perhaps 1.5 years ago, and today it's just normal to be at that number. This quarter's earnings might tell us more, but I don't think the equity party is overheated in any meaningful way.
On the market, Titagarh Real is actually spiking right now. It's higher by 10%. Of course, we spoke with the management earlier and they talked about how that big order that they've got in a consortium with RK Forgings, a 12,000 crore order coming in. And not just that, even going forward, the outlook for the company was expected to be quite strong. In fact, if we can, let's listen into the top bites coming in from corporate India. We spoke with a whole host of voices coming in from different sectors. Listen into what the takeaways were.
Indian opportunity is actually unfolding on a daily basis. We are in a space where there is a lot of tailwind. Our order book has grown significantly. In March 22, we were just under 1,500 crores, and March 23, we are over 27,000 crores of order book. So definitely there is a big tailwind. We are very well prepared to kind of be in the center of this opportunity, and wherever we, so for me to give you a kind of a number of what the order book is likely to be at the end of the year would not be fair. It would be more speculative. But what I can say is that there is a huge tailwind still happening. There is a big kind of thrust on the railway infrastructure, on the urban mobility infrastructure, both on the passenger side and on the freight side. So with that, we are in a good position to be able to maintain and grow this position that we have created for ourselves in this market. We are long-term debt-free. So considering that, and considering that we just got in a very marquee investor to whom we made a preferential issue of about 300 crores of equity shares just a few days ago. So we believe that, with this capital raise, with our balance sheet, with which cash that we are generating, funding of the capex is not going to be.
Anjali, Foods has certainly shot up, and there was this notice which they had given to shareholders, to exchanges rather, that they are starting road shows in Singapore, and it is mandatory for them to bring their holding down. And I'll tell you why it's mandatory for them to bring the holding downs. As per the listing norms, where the promoter has to bring it from 85% to sub 75%. Deepak, it's one of those yes and no stocks. I can give you 5 reasons why you should own it. I can give you 5 reasons why you should not own it. Let's hear your thoughts.
Which one is this?
Patanjali Foods.
Patanjali Foods. Oh yeah, of course. I mean, there are so many reasons to own it, and I think a homegrown FMCG brand deserves, with this kind of distribution, of course, deserves a larger mention. But what's happened is also quite of strange in the stock, because the promoter's given up significant upside in the businesses that the promoter independently owned to bring it into the fold of the listed company, which is relatively very positive on the corporate governance front. That makes it a little more attractive than otherwise the core business would have lent itself to. But having said that, I haven't seen the latest notice, but it's still got to prove its worth. I think if they continue to go where they're on the path they are, they might actually have something good and smart up their sleeves going forward. There is also the Ayurveda angle to the whole thing, which is attractive to a large number of consumers, which other FMCG brands may not necessarily have. So if they're able to capitalize better on that opportunity, they're not able to own as much in the space as they perhaps started out to be. But if they're able to push that forward, I think this company can be multiples of where it is. We don't have any ownership right now. We're waiting to watch how they execute going forward.
And I think this perhaps must be the rank underperformers within the FMCG pack, where most of the stocks are already at a life high, if not 52-week. But let's move on. Let's get you all the chatter across the dealing rooms. Sharad is here to get us all the buzz. Sharad?
Well, yes, this week PM Modi will be traveling to USA and the drone industry will also be in focus. And also the important thing is what we are getting from the dealers is Paras Defense would be in focus as its arm Paras Aerospace is expected to win orders in the technology transfer segment. Now do remember this will be a JV between the company as well as the US governments. Now the arm is expected to develop drones based on the transfer, and the entire deal size which will be there between US and India for drones could range between the rupees 22,000 to 25,000 crore mark. Now apart from this, also the technology transfer will take place between USA, DRDO and some of the private players in India. And lastly also, the company is expected to win an automation defense order roughly between 400 to 800 odd crore rupees, which is actually the old business segment. And also India is one of the largest home when it comes to drone manufacturing as well as technology solutions. Now the stock itself, if you look at it, it's up almost 35% from March lows, and currently the market cap stands at roughly 2,400 crore rupees.
Okay, Nuresh, wanted your take, if you can, on a couple of these charts which are buzzing in the trading session. MRPL is high by 11%, Credit Access Grameen is up 9%, and then of course you have eClerx as well, which is high by 7%. Any charts that you track, Nuresh?
So Credit Access Grameen looks interesting in the space. We are seeing a good momentum across the whole financial space. Out here, the stock is setting up for a fresh breakout, so looks promising. Even at current levels, could slowly head up higher, and has been trending well from that breakout about 1,1100. So looks promising. MRPL is something which is on radar on dips. In the last 2 days, it has moved up as such. So would wait for some more time. If it dips back to 70, 72 levels, that is the time I would like to get in. The risk reward is not great, but the trend is still positive. So if somebody has a position, one could ride this on for a move towards 90, 95 levels.
Deepak, if I have it right, you track Z closely, right? And a lot is happening there with respect to the SCAT order. My colleague Ankur is also tracking what's happening there today. But any view on Z Entertainment?
So we're not positive. The order's pretty damning, but I think it's not enough. I feel I don't know about whether the SUT has given its order yet. So I feel that perhaps there will be a lot more investigation required to come to the kind of the positions that SEBI has on this. But it was known for a really long time. I think I first wrote about it in 2017 when a large number of promoter entities of the SL group, the promoter group of Z, had taken on loans from a lot of mutual funds through bonds. And these were non-operating companies that were issuing bonds backed by Z shares. Eventually, the default happened in 2019 or so, I think, or 2020. Then there was a fair amount of selling of shares by the mutual fund owners who effectively brought down the ownership of the Z promoters down to 4% or something, because they sold all the pledged shares. And then there were loans given from Z effectively to entities owned by these promoters by providing a quasi guarantee on the loans that those entities took from banks, and then the banks then took the Z's money away, which is complex in a way, but then the answer to that was the money was returned. And now what seems to have been the case is that Z has apparently made a bunch of payments which have been routed through multiple entities within seconds of each other. And then the money has come back to Z, and they've been calling it a repayment of those loans. So this is, it needs more investigation and evidence, I believe, to stand muster in higher courts. but it does not speak favorably about governance inside the company. And there's never one cockroach. There will be more that will tumble out if there is a deeper investigation. So not positive. I mean, the business has always been a very good business, the only profitable media business in town, really. But at this rate, I would say only profitable listed media business in town. But I would say here that I think too many unknowns. I won't take the risk.
I'm glad you specified listed, Deepak. Well, let's get into BTST ideas as well. Naresh, what's on your list?
So first is a buy on Tata Power on verge of a short-term breakout about 225, stop loss at 220 and a target price of 230. Second is a buy on Bank of Baroda, which has given a breakout today with very strong volume, stop loss at 192 and a target price of 200.
Right. Rudra, what about your BTST ideas?
I'm in fact going for two sell calls, both available in future. One is a sell on Axis Bank, looking at target of around 950 with a stop loss of 973. And Can Bank can also be sold, looking at targets of 297 with a stop loss of 307.
Okay, so those are some of the stock ideas coming your way, but Skipper Limited is the stock you need to watch out for. That stock is locked in upper circuit 20% higher. There was, of course, that big order that the company backed. We spoke with the management. They said that they're expecting 25% CAGR growth in terms of revenue for the next 2 to 3 years, and the margin on the new order is quite accretive at 12 to 13%. So that is something that the street is liking at this point of time, and that's why the stock is locked in upper circuit. You also have Mankind Pharma, which trending higher. Cyient is making a bit of a move given that DLM IPO is perhaps expected at the end of the month. On the losing side, Paytm is down. You have Marico under pressure, and KC International is also losing steam. And not to forget Adani Enterprises, which has been down as much as 4%. Deepak, apart from Z Entertainment, what is the other stocks that you're watching out for? Of course, on Z Entertainment, you're not very positive, but which are the stocks or sectors that look the most promising at this point of time?
So I think, we run a PMS, so we have a lot of investments here. So we're, talking our book in a way. But I think there's still a long way to go in the defense space. We're in the beginning of a relative, re-rating of the entire sector in terms of revenues, in terms of growth, in terms of net profits. I think this whole sector will grow multifold, whether it is the aeronautic spaces and companies in that space, or the Navy and shipyards that are building submarines and ships, or just defense equipment itself. I think there's a huge way to go here. And from the likes of, say, an M&M or a Bharat Forge that might make some parts of defense equipment to a Mazgaon dock or a Cochin shipyard, which might be in a slightly different place, but still recipients of relatively larger sums of money. I think this place has a long way to go. We have a fair amount of investments here, and also in we're starting to look at the semiconductor space. Well, again, they're very relatively new players here, very small companies, so not useful to just go gung-ho over them because they're so small, they have to prove their worth. But I think with the PLI and the relative importance of India, of semiconductor manufacturing in India going forward, I think this is going to also be a good space to be in. I'm sorry, I'm not taking too many names because we are still in the process of buying them. But I think these two spaces is something I think they will give us much better than index returns over the next 3 to 4 years.
Makes sense. Deepak, great to have you on the show. We'll let you go on that note. Thanks as always for joining in. Shriram Finance, Bajaj Finance, Bajaj Finserv, HDFC Life, Sun Pharma, TechM. It's really a mix of movers out there which have managed to hold out in the green. But a large part of the market hasn't. Adani Enterprises has lost about almost 4.5% of the futures. Adani Ports is going home with a 2% loss. Kotak Bank, Eicher Motors, Hero Motorcorp, Bajaj Auto, ICICI Bank, Axis, Reliance, Bharti, Apollo Hospitals. All these stocks have weighed in heavy on the markets today. But Naresh, I don't know what you think, seeing on the charts for HDFC Life, while the counter started off quiet, it's now, again rebounded. and a decent follow through in an otherwise weak market to its Friday's price action.
So the problem is, if you look at the price fall, which was sharp in February, it has been totally recovered. 620 was a problem zone. It has been crossed. Volumes are good yesterday as well as today. But technically, the problem is after such a move, the risk reward is not in favor. So would wait for some more time, let it pause here, because the longer term structure is still weak for the whole insurance sector as such. So in this zone, maybe if it sustains for maybe another few sessions, then maybe look at it. But for now, it's an avoid.
Okay, it's an avoid coming in on HDFC Live. Last 1.5 minutes left for the trading session. So on that note, Rudra as well as Naresh, we'll let you go. Appreciate you joining us on the show. It's been a tale of two halves today. We started off the day thinking that we are all set to make those record high levels, but that's not the case. We are ending not at the lowest point of the trading session, but almost 150 points off the highest point. It's Bank Nifty that was underperforming today yet again. Private banks like Axis Bank, ICICI Bank, Kotak Mahindra Bank, these were your key laggards, and even the market breadth turned unfavorable by the end of the day. We started off with quite a bit of gusto as far as the broader market is concerned, but by the end of the day, it's more favoring the declines versus the advances. In terms of the sector-specific mood, it was the underperformers that were seeing a bit of outperformance today. So whether it was PSU banking names, IT, Pharma, these were bouncing back, while you had some profit booking on the real estate, on the auto, on the FMCG pack. In terms of stock-specific action, a lot of brokerage-based action is what we saw today. 5-star the Nomura initiation taking the stock high by 7%. Jindal Steel, the Kotak upgrade, also giving a fillip to the stock by around 6%. And then you had names like Electra Green Tech, which was responding to the order inflow that came in. Talking about order inflow, that was the case for Skipper as well. That goes home with a gain of around 20%. Credit Access Grameen was higher by 7%. E-Clerks, Bajaj, Shriram Finance on account of that block deal that happened. They were the stocks which were in focus. From the pharma space, a bit of a bounce back on some of the healthcare and diagnostic names. So Lal Patlab was higher by 5%. You have Kim's, which was higher by around 4.5%. And even Nykaa, by the end of the trading session, managed to gain as much as 4%. What really lost out was Paytm. So that was down in the trading session, Aisha. And then, of course, Adani Enterprises too managed to end on the back foot.
Yeah, absolutely. Telecom, realty, infrastructure, banks, they were the big drags today. But that's pretty much it on this edition of Closing Trades. We'll catch you again with all the market action tomorrow morning at 8 a.m.